Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Chris Heller, co-founder and co-managing partner of Cordillera Investment Partners. He's here to discuss identifying new alternatives, investments with risks that are not necessarily correlated to the types of risks we often see in institutional portfolios. Chris, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill.
Tell us about Cordillera's investment approach. What are you looking for in terms of alternative investing?
Yeah, great question. So, when we think about what we do at Cordillera, it's really trying to find kind of new niche, non-correlated opportunities. So when you think about alternative investing, and I put that in air quotes, private equity, hedge funds, natural resources, those are alternative investments and alternative investment pools that have been around for quite some time and are quite well trodden now. So we think about our business at Cordillera as trying to find the new alternative investments. So what that means for us is really finding places where first, by being early to an asset or an idea or an asset class, we can extract outsized returns before the rest of the world and capital finds it and sort of diminishes and arbs down those returns. And then secondly, non-correlation. So finding things that zig when other things zag, or if you tell me what the S&P 500 did today, it will say nothing about what the types of assets or investments that we make have done. And so we're trying to be early, get great returns, and also find non-correlated assets.
So what's an example of where you would be early? I would imagine everyone's talking about AI these days. Yeah. Perhaps you have either discovered that or you've moved on from it. What's an example of an area that looks attractive?
Yeah, so there's examples of things where we were early and then the rest of the world found them. And so good examples of that would be music publishing and music rights. So we were in that 10 years ago, able to get really interesting multiples and returns. And then as money came in, the ex-ante prospective returns came down. And so moved on from that. Litigation finance is another good example of that, an area that was 10 years ago pretty interesting to us. Now as more capital has come in, those deals
what is that
less.
exactly?
So that is financing litigation. So if a plaintiff needs capital for something to go after someone to pay their legal claims, there are funders out there that will do that for a portion of whatever the award would be.
So the investment decision that you're making there is a calculated risk based on A, if they can win, and B, what the size of that settlement looks like.
Correct. That's exactly right.
That is interesting. That is
that's exactly right.
That must be a fun market to follow.
Yeah, that's great. And then there are other things that we invest in that the world hasn't found. So things like whiskey, some interesting things in sports and around other ideas that we think we can be and have this little niche to ourselves for quite some time. So there are things that the world finds, and then there are things that we have to ourselves for quite a time.
Do you think the private markets industry has either plateaued or enough people aren't doing what you're doing in terms of finding these opportunities? It feels as if the private markets class or even alternative investing has become very mainstream, very retail oriented, which is a good thing if people want to diversify their portfolios, but it feels as if it's becoming another product, if you will.
Completely agree with that. I mean, that was really why we started the firm, which is that acknowledgement, that idea that alternatives really aren't alternative anymore. For the last 25 years, people have stuck to the well-trodden asset classes, private equity, private credit, hedge funds, natural resources. So we really just think about our business as going back to the basics of finding truly alternative assets. And I think there's reasons why the industry hasn't innovated over 25 years. It's a lot about people and incentives, and do you have an incentive to stick your neck out and find something different? And if it goes well, maybe you get a slightly better bonus, but if it goes wrong, maybe you get fired. And so there's a lot of reasons to sort of stay to what is really not scary. And we love that. The fact that is what creates the opportunity for us. It's hard to do what we do. There's not brokers in the space that come to us with deals. You have to go find them in sort of a bespoke manner. We have a lot of thematic investing. And so finding these things, diligencing them, and structuring them is difficult, and it's different than what most people do in this space. And I think that's what keeps people out.
Yeah, this is definitely an institutional offering for sure. You have to think about liquidity, you have to think about understanding the risk, understanding how these products work. So this is definitely for the institutional space.
That's right. Yeah, I mean, our investors are endowments, foundations, sort of big institutional investors, as well as large RIAs and family offices as well.
All right, Chris, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.